Well, hi everybody. I'm John Muschalek with HilltopSecurities, and I'm back with Tom Kozlik, Managing Director and Head of Public Policy and Municipal Strategy for HilltopSecurities. And we are back with our back to school edition of the Muni Minute.
It is.
So Tom, summer's coming to a close. There's always a lot going on. And since the last time we got together, there has been a surprising twist in the jobs data that's come out, and some unexpected drama in Washington. Oh, who would have guessed it, right? With the Bureau of Labor and Statistics specifically. Now, against that backdrop, how does the municipal bond market look today? And is the window of opportunity that you've talked about in the last couple of Muni Minutes still open, or is that ship sailing away?
So the ship is loading, and it's going to be leaving soon. I think that's the best way to say it, because even over the last kind of 2-ish weeks, yields have fallen by about 15 basis points, and the market wants to take yields lower. Right. Now, like you're talking about, there's been a lot of volatility, a lot of uncertainty. There was the GDP number that came out that was pretty weak. There was the jobs data that came out that was pretty weak. But there's been inflation data that's been coming out that's a little more mixed, right? So even over before recent days, the potential for a interest rate cut by the Fed in September was pretty high, around 80%. That's fallen now to about 40 or 50%. But as I said to you in our last installment, the Fed is going to stay data dependent. Right, so I think I think that what's going to end up happening is that the economic indicators are going to continue to come in weaker, and so I think that the Fed is, whether or not it's September or another point by the end of the year, is going to start lowering rates, and so I think that the ship is going. I can't tell you exactly when, but I think that the ship is going to start to sail.
Okay, so as I mentioned, there's a new head of the Bureau of Labor and Statistics. Mr. Antoni, and he recently floated an idea of pausing monthly job reports and data releases. That's a unique move.
Yeah.
How do you think that plays out? What's the ripple effect of that on the Fed's decision making and on the municipal bond opportunities that we're talking about?
Yeah. So the first thing that I think about that I thought about when I saw that a few days ago, I don't from a market transparency perspective, I definitely don't like that.
Right.
While the process that we have isn't perfect, it is a process the market understands, the market's able to digest. I don't love the idea of them making it what I would say would be less transparent, number one. Number two, if they did do that, I think that what would end up happening is that it would have the opposite effect of what the administration really wants it to have. As I just mentioned, I think that economic activity is going to start to weaken. I think the Fed is going to get there. I think that if anything, this could make it more difficult for the Fed to get there.
Got it. So you recently wrote, and for those who are only watching the Muni Minute, I want you to know that Tom puts out a lot of information, a lot of commentary that is available on our website at HilltopSecurities.com. You recently wrote about what you're calling the post-Golden Age Realignment in municipal credit. That's an interesting phrase, right? And an important follow-up to the Golden Age of municipal bonds. Can you help unpack that, what exactly that means in the realignment, and why should investors be paying attention right now?
So from 2021 to the beginning of 2025, we saw the Golden Age of public finance,
right.
And that was really the reason why we thought that there was a golden age is because there was hundreds of billions of dollars that went from the federal government to public entities over that kind of multi-year period. That golden age has ended. That being said, this is not 2009, 2010, right? So my point in making that comparison is that there was, in the previous decade, there was a real retrenchment with regard to issuance, employment on the public sector side. That's not what's happening. There is a kind of a rediscovering or a recalibration or realignment of credit that's going to be going on, and state and local governments and other entities are going to be matching up their revenues and expenditures. That's something that's going to happen over the next couple of budget cycles, but municipal bond credit quality is still very strong. It's still very robust. And rating upgrades are continued to outpace downgrades. That being said, there are certain sectors where there are structural issues. K through 12 schools, higher education. So you need to be looking at the individual credits.
Understood. Well, there is never a dull moment in the market.
There's not.
This has certainly proven to be the case through this summer and going forward. So that's all we have for today's Muni Minute. Thanks for watching.